New Zealand's house prices are collapsing, and the rest of the world should take notice. After seeing one of the biggest booms post-COVID, New Zealand is now in the forefront of house price declines. But just how far will house prices crash? And what does this mean for other nations that saw similar post-COVID booms in housing? I'm Biko Konstantinos, and that's what we're going to talk about today. Whether you own a property or are currently renting, stick around because the housing market affects everyone, and especially in countries like New Zealand and Australia, where house prices are now so much higher than the average wage. And if you enjoy this video, please give it a like and consider subscribing to my channel. I'll provide you with independent analysis and commentary. Now, what's happening with New Zealand? New Zealand is an island country in the Pacific Ocean, southeast to Australia. New Zealand has two large land masses known as the North Island and the South Island. New Zealand has a population over 5 million and is known for some of the most stunning landscapes, which you may have seen in The Lord of the Rings. But guess what else New Zealand's known for? Bloody expensive housing. Now, Australia and New Zealand have had a great rivalry in sports over the years, but there's one area that they're totally in sync, and that's an obsession with property. Why, you ask? Because property in both New Zealand and Australia has risen way faster than wages over the past 30 years. And when you add in ultra generous tax deductions, it's no wonder that housing's the topic on everyone's lips, because that's been the easiest way to accumulate wealth with very little risk. For example, house prices in Auckland have risen from about 5 times the average wage in the early 2000s to now around 9 times the average wage, which just shows you how much housing affordability has deteriorated in New Zealand. Now, the consequence of house prices rising way faster than wages is that it builds up a massive wealth gap. So while property owners are seeing very tax-effective wealth grow year on year, renters are falling way behind. So the gap between property owners and renters is getting larger and larger. So housing affordability was already crap before COVID, but then what happened after COVID when interest rates were reduced to zero and the government propped up the housing market? Well, this is what happened here. After the tiny blip for COVID, look what happened to house prices. They went from a median house price in the 600,000s all the way up to $900,000. And that's the median price, meaning in many places houses were selling for way above $1 million. I can tell you one thing, wages weren't going up that fast, nowhere near. So New Zealand, along with some parts of Australia, saw post-COVID gains of around 40%, which is astronomical when you consider house prices were already expensive before COVID. But guess what? The party had to end. Central banks realized that being ultra loose with money can cause inflation to surge, which happened across all advanced economies, including New Zealand. So to combat this inflation, central banks started aggressively hiking interest rates, and the Reserve Bank of New Zealand was especially aggressive. New Zealand's gone from 0.25% all the way up to 4.75%. And as you can see from this graph, they've been perhaps the most aggressive across these advanced economies, with USA, Canada and UK behind, and Australia way back here. And to think Australians are freaking out about their interest rates. So what happens to a speculative housing market when interest rates rise? House prices drop. New Zealand started raising rates here in October 2021. Prices peaked the following month, but from there it's been downhill. Now, an interesting takeaway from this chart, from August 2022, prices started rising for a couple of months before declining lower. Now, I point this out because Australia is seeing a small rebound in house prices over the last couple of months, and people think house prices will just start rising again from here. But if we follow New Zealand's lead, it could just be a small bump in a larger downturn for house prices. The main difference, however, is that New Zealand has been more aggressive with interest rate rises. So how far have house prices fallen in New Zealand? Well, from the peak, they've fallen around 16.2%, with both Auckland Auckland and Wellington falling over 20%, which is some of the sharpest house price declines New Zealand has ever seen, and it equates to roughly 160,000 being wiped off house prices since the peak of November 2021. However, looking at the big picture, current median price around 760,000 is still well above the pre-COVID median price of 680,000. So if the median price fell another 80,000, house prices would be back to pre-COVID levels. And wouldn't that be one for the record books? Recently in New Zealand, listings for houses have risen significantly, and this is due to very weak buying demand, causing houses to remain on the market for longer. At the end of February 2023, the total number of properties for sale in New Zealand was 29,000, up 5,800 year on year. So that's a 25% increase in homes for sale compared to a year ago. But if we exclude Auckland from the figures, for sale listings have actually risen 40%, which is quite staggering. So listings are surging, but actual property sales are falling, going from an annual figure of 5,750 a year ago to 3,964 for the 12 months up to February 2023. So that's a 31% drop in property sales. So because housing supply continues to run well ahead of buyer demand, this suggests that house prices will continue to fall. But by how much? Now, New Zealand, similar to Australia, saw many people fix their mortgage rates at ultra low levels after COVID. Now, another major factor that could affect house prices in New Zealand is the fixed rate mortgage cliff. So when the current fixed rate mortgages expire, New Zealanders will have to refinance at a much higher mortgage interest rate. So from under 3% to over 6.5%, which will be a massive shock to those homeowners and will put huge pressure on their consumer spending. But even more worryingly, could cause some people to have to sell their homes because they can no longer afford to pay their mortgage. Now, the Reserve Bank of New Zealand has forecast that the economy will fall into recession, expecting a peak to trough decline of around 1% of GDP across 2023. Quite startlingly, GDP in New Zealand has already fallen 0.6% for the December quarter, which was way worse than what was predicted by economists and the Reserve Bank. So considering the technical definition of a recession is 2 quarters of falling GDP, New Zealand's already halfway there. The consequences of a recession or negative economic growth in New Zealand are as follows. Consumers tend to get more afraid or go into safety mode, which means they want to save more and spend less money. And this affects many businesses because when consumers aren't spending as much, businesses aren't making as much profits, and that in turn leads to more layoffs as businesses and companies try to reduce their expenses as their profits decline. So these layoffs cause the unemployment levels to rise, which could potentially have the biggest effect on house prices, because at the moment unemployment levels in New Zealand and Australia are extremely low, sitting just above 3%. And when unemployment's low, most people have no problems paying off their mortgage because they have a steady income. But it's extremely hard to pay off a large mortgage if you don't have a job. And that's the big worry if unemployment starts rising. Considering recent home buyers would have to have taken a large mortgage because house prices are so expensive, they would be at major risk if they lost their job and couldn't find another one quickly. And that's probably the worst case scenario for the New Zealand housing market. If unemployment were to rise sharply, we could see a large increase in forced sales of houses. And if you have forced selling with weak buyer demand, house prices can actually collapse. Another thing about the New Zealand housing market that I haven't mentioned yet is that they seem to be more proactive in trying to improve housing affordability compared to Australia. New Zealand has scrapped negative gearing, banned foreign ownership of housing, and increased the time an investment property has to be held to obtain a reduction in capital gains tax. So because of all of these policies New Zealand has put in place to try to improve housing affordability, overall demand for housing should be slightly lower than Australia, which still employs ultra generous housing policies that greatly favour property owners. Negative gearing and the 1-year requirement for a capital gains tax discount being prime examples. So what's my personal view of the New Zealand housing market? Well, considering the whole landscape that we've delved into today, I think it's likely that house price decline lines will continue. So the current drop from the peak of 16%, I expect to grow and end up falling over 20%. And once the falls are all over, they could actually wipe out all the gains seen since COVID. And if that occurs, that will be a massive boom slash bust, which will really hurt recent home buyers who bought during that boom period. But that's just my opinion. As we've seen recently, anything can happen. But one thing's for sure, it's gonna be a bumpy ride. I'm Pico Konstantinos.